In today's news, XRP is currently pumping aggressively in comparison to the rest of the crypto market, currently up 13.02% on the daily time frame, now valued at 53.64 cents, up from 47 at the beginning of the day, and has been experiencing almost a week straight of positive price action. This is very promising news, very promising to see, and may be the early warning signs of XRP starting to take over the rest of the crypto market. Now, there are numerous reasons, or speculation if you will, as to why XRP has ignited such bullish momentum. Some speculate that is the cause and effect of the German government selling off all of their Bitcoin and some of it being invested into buying up XRP, which is plausible, but I believe, in my personal opinion, not financial advice of course, that there is much more at play than just that, mainly circulating around the developments happening with the SEC and Wall Street with Ripple and XRP, which is huge news. Firstly, I want to bring your attention to this short clip here from Zach Rector. Major XRP news covered and a potential reason for XRP's current price action. Take a closer listen.
XRP just got a major listing, and this is not an exchange. It's even more important than being listed on a cryptocurrency exchange. And if you're wondering, are institutions sleeping on XRP? Well, look no further than what I'm about to show you next to confirm that they definitely are interested. We got XRP ETFs on the way, and they absolutely are looking to pick up some XRP. So yesterday, it was announced by the CME Group and the CF Benchmarks that they are going to be creating an XRP index benchmark reference rate. What is this for? Well, this is for institutions that are launching the ETFs. All of the ETF platforms now, they're tapped into this to get current up-to-date pricing. So Brad Garlinghouse says, this is the first steps towards institutional crypto products is to have a trusted benchmark reference rate. It's nice to see the CME Group and CF Benchmarks collaborate on this for an XRP index. The market has spoken.
Now, I covered some of this story in yesterday's video, the fact that the derivatives marketplace is projected to be around $500 trillion alone, which is insane and a crucial reason for why XRP can't be dirt cheap and must be worth thousands of dollars in the years to come. As highlighted in this critical post here from the digital asset investor, the true intentions of Ripple is to handle 100% of the transactions which take place in the derivatives market. Ripple has not made this public knowledge as of yet, but this is their true intentions. Taking over Swift is just their short-term plan, but long-term, they want complete control over the derivatives marketplace. And think about the volume of money that will flow through XRP if Ripple control this $500 trillion market. How the price of XRP is guaranteed to skyrocket, especially because the collaboration which gives XRP even more exposure now to the big dogs in Wall Street. This collaboration with CME is such big news. CME's group parent organization is the International Monetary Market, and some of the largest shareholders of CME Group include Vanguard, BlackRock, Capital International Investors, State Street Corp, JP Morgan Chase, and Capital World Investors. This is huge news. So this collaboration CME did with XRP and the XRP index would have been done with these shareholders in mind. This is what Wall Street want to happen. They want exposure to Ripple and XRP. They want to have more access to the future world reserve currency. So evidently Wall Street are no longer being silent about their love, their support, their desire for XRP, as now Grayscale has spotlighted XRP as one of the most valuable crypto assets in the industry. And this is the inevitable future we are heading towards. Tokenization, a market which XRP will be at the center of as well. We can see here from Cyprus, almost all institutions, being 92%, were questioned, and they stated that their firm has started to see benefits from tokenization and digital asset trading, while 79%, which is still a vast majority, have experienced cost saving from switching to digital assets. This is a big deal, and it ensures investor confidence in this new growing market structure, this new growing marketplace. And keep in mind as well, this information comes from GDF, Global Digital Finance, the world's largest open innovation community advancing digital finance. This is a very big deal. So with that in mind, how desperately these organizations want access to this new marketplace, how much they see the benefit from it, it is very likely that this announcement regarding CME's collaboration with XRP is playing a factor on XRP's price as soon its true value will be revealed. But that is not the only reason I have for you. Because today, of course, is July 13th, the 1-year anniversary of XRP's monumental victory against the SEC, when Judge Torres declared XRP is not a security, when Brad Garlinghouse and Ripple's team proved that they were on the right side of the law and now will be on the right side of history. This verdict caused shockwave throughout the entire crypto and financial community and caused XRP to jump from 47 cents to almost $1. So in remembrance of this historic day, that could also be another reason for XRP's price action, or potentially it is because, in accordance to Jack the Rippler here, the SEC is having a secret meeting this Thursday, July 18th at the HQ in Washington, DC, which is massive, massive news. So once again, speculation has been circulating on the anniversary of XRP's victory, and in conjunction with Wall Street's evident desire to have access to XRP more so now than ever, that this may be the settlement deal that we have all been waiting for, and therefore opening the doors to an XRP ETF, XRP IPOs, and the green light to mass adoption of XRP from US institutions. And another reason though why people are speculating this is because the SEC at this point may have finally given up, as they have got tired of losing, first to Ripple and then continuously ever since. As the SEC drops key stablecoin investigation in win for crypto industry, seemingly the SEC are starting to get tired of losing, giving up on their sham investigation into the Paxos stablecoin. And remember, the SEC did not just do this spontaneously and come to their senses that the BUSD stablecoin is not a security, because exactly 2 weeks prior, Judge Berman Jackson ruled in the Binance case that the SEC has failed to articulate any plausible claim that BUSD is a security, which was another massive blunder by the SEC and a massive victory for crypto, but especially for XRP, because these cases are linked. And coincidentally now, the SEC has seemingly become more lenient towards crypto offerings and regulated in a sense for banks and brokerages now. As we can see here, this scoop from Fox Business journalist Elena Terrett regarding the SEC decision on the matter, and effectively in summary of this, the SEC admits that they lack understanding, or they are a lack of transparency, if you will, about how specific expectations were granted regarding SAB 121, SAB 121. And due to this lack of transparency, some of the banks and brokerages have managed to convince the SEC that their situation is different from what SAB 121 describes. And if they can guarantee customer ownership remains secure, even if their banks fail, then there's not a problem and they can offer crypto services, which is huge, huge news for the growth of this industry. And this leads straight back into what myself and many industry leaders have been telling you for a while now, that many of the traditional banks are integrating crypto into their core banking system, that they want crypto technology. Take a listen.
So Matthias, from your perspective, how is it looking like for the traditional financial systems to be able to build this new infrastructure and integrate it well with the traditional setups?
The question addressed to me, Taurus of course has an important part to play as well there. On the side of the banks, as we are quite fortunate, as I mentioned, many of the traditional banks are now already adopted cryptocurrencies into their core banking systems. This is very notable, because what that means is most banks in Switzerland, with the exception of one that I know, actually set it up like securities. When you have a cryptocurrency in a core banking system, it's set up like a security. And that means that from a processes perspective, the hurdle for the bank to integrate into the digital asset space is a lot of the work has already been done.
This is precisely why crypto is going to succeed. Don't listen to anyone else that tells you otherwise, because it is evident right here in black and white. Despite the setbacks happening with crypto right now, evidently Wall Street and all the big banks, all the big institutions, everyone wants access to this market, and they want access to assets like XRP. They are going to be at the center of the ongoing developments happening. They have been for a while now. This is the most sought out asset that the institutions are after. Previously doing so in secret, but now they are not being silent about it anymore. They're being much more transparent that they want XRP. This is why XRP can't remain dirt cheap. So do your own research, and if you don't want to miss out, then remember, don't look short term, think long term, and I'll see you in the next one.